Okay, so today we're gonna learn types of accounts, which is the first chapter of class 11. So let's start. Types of accounts. Now, this is the very first topic where you need to learn and have a clear understanding in order to do the journal entries. Okay. Now, if you do this, if you understand this and have a thorough knowledge and clear the concept of this types of accounts, you will be able to do the journal entries without any problems. So let's start. Now, basically, there are two types of accounts. Like, number one is personal account, and the other one is impersonal account. Okay, now personal account means, as you can see, there's a person over here as well. So personal account means a person or a companies, etc. Okay, and impersonal accounts are categorized into two different parts, that is real account and nominal account. Okay, so let's just see what real account is. Real account means the lifeless things which have a monetary value. You have to keep in mind that real account always have a monetary value. Okay, say for business have some properties, like say for example land, building, car, furniture, machinery, etc. All these things are lifeless things but have a monetary value in business concern. Okay, there are some intangible items also, which we are gonna discuss in the later part of the video. Okay, so in that, and nominal account. So nominal account means fictitious things or imaginary things. Fictitious things or imaginary things which we can't see, which we can't touch, which we can't feel, but are there, but their presence are there in the business. Okay, so those kind of things are nominal account. So you don't need to get confused. You will understand all these types of accounts in the later part of the video. So first you need to know what type of accounts are there. Okay, so basically we can say that basically there are three types of accounts. One is personal account, other one is real account, and the last one is nominal account. Okay, now let's just start with the first part, that is personal account. What is personal account? Let me just put it A over here as a number one. Okay, personal accounts. Now what is personal account and how to deal with the personal accounts? What are the rules to do the personal account? Okay, now personal account are amplifies like a person, as I have mentioned earlier, person or companies, even includes organization or forms or any business which have a legal entity. Okay, legal entity means okay, as I said, legal entity means any business or any concern which has been recognized by the law, which has been recognized by the government of the country. Okay, so what are the rules? Say rule. What are the rule? How to deal with the personal accounts? So for personal account, rule number one says receiver in the business are debited and giver in the business are credited. In the sense, these are debit items and these are credit items. Now most of the students get confused with this part, like who is receiver, who is giver, which one to be considered as a receiver and which one to be considered as giver. So to just not to complicate things, I'm just gonna suggest you to understand this or learn this, or to memorize this. Like, receiver are always debtors, and since debtors are always debit items, so you need to understand that receivers are always debtors. And other one is giver. Givers are always creditors, and creditors are always credit items. So if you understand this part, if you understand this part, if you learn these things, you will never forget the rule of personal accounts, how to deal with the personal accounts. Okay, so let's just understand the personal accounts with more clearly with an example. Okay, so let me just put an example number 1 over here, and let me just say the transaction, like I have a business, and I'm like purchasing goods or purchase goods. That's what normally terms used for accounting transactions. So for your understanding, I'm just writing purchasing goods from Rohan. I'm purchasing goods from Rohan. Okay, so we need to understand in this transaction that in this transaction there is only one personal account, that is Rohan. Rohan is a person, and person includes in personal account. So we need to understand that Rohan is only personal account in this transaction. So now we have to figure out Rohan is a giver or receiver. Okay, so let's just understand in this way, that we are purchasing goods. That means we are purchasing goods from Rohan. That means Rohan is giving something to us. Rohan is giving goods to us. So in that sense, Rohan has become giver. Rohan has become giver. So that means Rohan is giver. Since giver are always creditors, and creditors are obviously credit items, so we're gonna just put over here, this one is debit item, this one is credit item. Since Rohan is a giver and giver is a creditor, so we're gonna put Rohan in a credit item. Okay, now let's take another example, like example number 2. Let's just say that we are selling goods. Okay, sold goods to Ram. Okay, now same thing we have to consider, that Ram is a giver or a receiver. So we need to understand this transaction first. Sold goods to Ram, that means we are selling goods to Ram. That means Ram is receiving something from us. Ram is a receiver in this case. So in this case, Ram is a receiver. So we're going to write Ram is receiver. Since Ram is a receiver, so receiver is always a debtor item. So the debtor is a debit item. So we're going to put Ram in a debit side. Okay, so this is how you identify whether that personal account is a debtor or a creditor. If he is a debtor, then we will put it in debit side. If he is a creditor, then we will put it in a credit side. As simple as that. So if you have understand this, or if you have any problem in understanding, so let us take another example. Okay, so let us take another example. Say for example, okay, since we have bought goods from Rohan, let's just say goods returned to Rohan. Okay, now in the first transaction we have purchased goods from Rohan. In the third transaction we are returning that goods to Rohan. Okay, for some reason or any other reason, we are returning that goods to Rohan. Okay, now in this situation, Rohan is actually receiving something from us. Rohan is actually receiving something from us. So Rohan becomes a, so Rohan in this case becomes a debtor item. So debtor is always a debit item. Okay, since Rohan was first a creditor item. Okay, look over here, right? Since Rohan was first creditor items, now we are returning goods to back to Rohan. So we need to debit that creditors items in order to reduce that amount. Okay, so in this situation, Rohan is receiving something. So we are gonna put Rohan in a debit side. Okay, so let me just put example number 1 over here, example number 2 over here, and this is example number 3. Okay, so this is how you will how you have to identify which one is a debtor items, which one is a creditor items. And in that situation, if you understand this clearly, you won't have any problem in future in doing journal entries and all. Okay, so this is only the first type of account, that is personal account. Now let us move on to the next type of account.